Morning, morning, morning. All right, so I'm looking to get INTC at the open, and I'm also watching SPY and futures along with SPX right now. Pretty normal, except I'm looking to grab INTC calls because Biden name dropped them yesterday. For the open here of Tesla, I would like to see us over 870. For INTC open, I'm just looking to slap the ask on that. And then with SPY, I'm looking for us to open over 431.85. Otherwise, puts. Alright, I'm going to grab some coffee. If you guys have any questions, drop them in the CJ live chat and we'll take care of them as they pop up. Major Russian venture will not invest in. Wow. That's big. That's pretty big. Let's go take a peek at Exxon. Let's go take a peek at him. What's your damn ticker? Zom. Puts her calls on this. That's what the question was. Puts or calls? Probably calls. It's gonna be calls. It's pretty bullish that they're cutting ties from that. Let's look at that article. Oh shit. Japan was in here? Yeah, that's what we needed. Oh my god, cuz after we allied up with Japan about sanctioning Russia, this is why we did it? Oh my god, this is crazy. That's why we partnered up with Japan. Are you kidding? Project map. Oh no, thank you. Wait, is it in Russian? Looks like it's all in Russian. No idea. I can speak a little Russian. I can't read it. I just wanted to see where it was. Oh, that showed the percent stakes. So that would be different companies. Here's Japan. Here's Exxon, here's us. Right? Or, oh, no. That would be the Russian party. Sadeco. Yeah, that's Japan. That's Exxon. This is that third party. Two third party Russian. And then the last one, who is this? India? Oh, God. Man, you can't be screwed around with India. This thing looks huge. This thing looks huge. I'm just showing. Pretty cool little GIF. think we're done watching that. Boom. There's that image. So this is the entire supply chain that's being affected from it. All the refinery stations, from the rig to the barge to the, what is it, secondary station, going to all these refinery plants, then transported all the way down. This being out is affecting so much more. So that's great for Exxon. Yeah, bullish on Exxon. ZOM and INTC. I'm going to try and okay. All right, 2 INTC calls, the 48 call. What did we get filled at? I feel like it was bad. No, not bad. We got filled at 0.43. Okay. I'm gonna go ahead and set my trail stop. For 0.1. Send to. All right, so we are already in the profit. 2 INTC calls have been purchased. The $48 call expiring this week. We are off to the races. So I got filled at 0.43 on those. ZOM, I have not entered my calls yet, but we will be watching. All right, so my 10-cent trail stop has been set, and we are right now, trail stop is at 0.56. 0.56. And the chart is just pushing higher. So Biden name dropped Intel yesterday. So that is why I'm looking at this. It's why I was. It's why I am. I haven't purchased anything on ZOM. I wish I had bought more of these INTC calls. It's incredible. Trail stop now moved up to 0.63, so we are locking in no matter what, $20 of profit. Love to see that. Love to see that. Well, those are doing quite well. Boom. Trail stop hit. Profit 0.62 and 0.63 sold on those. Love it, love it, love it. Probably continue to go higher. But that was easy money right there. Easy money. Easy. I can't say it. Futures doing well today. It looks. I'm not buying anything else quite yet, just because of the way it's looking. ZOM looks a little bullish. Yeah, really great play there on INTC. So let me grab the screenshot for you guys on that. Alright, dropping that down here. Boom, boom, boom. And I personally want to go back in, but I might wait a little bit to go back in. So we got out at 0.63 with a 10-cent trailing stop loss for 47%. 7%. I think technically it was 45, so we'll just leave it 45%. Boom, boom, boom. There we go. Even higher on INTC. Love it, love it, love it. I like this ZOM action as well. Still haven't re-entered anything. So SPY actually moving pretty well right now. Oh, wow. Super well. I kind of want to go play SPY. Let's go look at these SPY contracts. It expired today. Oh, we're flagging on INTC and ZOM right now. Ooh. Looking spicy. Wow, this looks boring right now. This looks incredibly boring. We will go look something else. We don't have a decision from anybody yet. Anybody. I mean, we scout INTC. I'm thinking we go long on ZOM here because we're basically entering price discovery phase, and we'll enter the same kind of principle. We'll get a couple contracts, we'll get the ask, and then we'll set like a 10-cent trail stop. So the volume is not that great here. So I have put my order in, and it looks like we will not get filled though, which is unfortunate because I am a strong believer in not chasing. Oh, I actually got filled. That's incredible. Okay, sell, single, and this is actually going to be a trail stop as well. Market, and we'll set 10 on that. So we have 2 ZOM positions, and we will send that over. So we got filled at 0.87. 0.87. So for those, I'm in the $82 calls, about 4,500 open interest. Okay, we got stopped out of that. Not a huge deal. Looks like we still have 1 contract though. Still have 1 contract. We just came and tapped the limit ever so lightly. Okay, we had bought at 8.7, sold at 7.9 for an $8 loss right there. Not a big deal. It's only $8. Now we are up to, I probably could have spread out my trail on that, which I, full disclosure, was editing my trail stop as we were taking that dip because I wanted us to tap the VWAP. Alright, trail stop has been moved up to 0.84 now. Trail stop is at 0.87, so we are breaking even on that bad boy. INTC still looks incredible. SPY has room up to 435. Full disclosure though, not trading SPY at the moment. ZOM is really shooting up right now. Really shooting up right now. What is my trade price on that? 0.87, okay. Okay, 435 is an anticipated point of resistance on SPY. Trail stop has been moved up on Exxon to 0.91. Move my trail stop up now. We are at 0.95 on the trail stop. Tighten it up from a 10 cent to a 5 cent trail stop, 0.05 trail stop on that. Damn, what I missed. Had no internet. Dang. Yeah, we played INTC. Now we're playing XOM. XOM. Wicking big time here. Okay, let's get ready for our SPY puts. All right, grabbed a 433 put there on SPY. Okay, and we are going to, we just trail stopped out of our ZOM call, which was fantastic. Beautiful, beautiful, beautiful. We're already in the green on our SPY position. Okay, so let's set this trail stop. We'll set this one a little bit wider. We'll set it a little bit wider at first, and then we'll tighten up as we go down. Okay. Alright, SPY is turning. Love to see that. We're out of our ZOM, out of our INTC, which I do kind of want to go back in on INTC. %. Alright, I kind of want to go back into INTC here. Let me remove all my studies. What was our fill? 1.87. All right. Our trail stop is currently at 187. Love that. All right. Trail stopped out for $1. Not a big deal. So I'm looking to pull back a little bit here. Plan on re-entering SPY. I was actually trying to, again, tighten my stop up on SPY. We get out at? Yeah, it was $1. Really lost $1 on that, but that's fine. Oh, wait for a flush. Not that big of a deal. Oh, Tesla. This could be a big one on Tesla. This could be a big one. I don't like the spread on these contracts, though. It's the only thing. Yeah, we'll wait. So I'm building a nice leg up. Damn, SPY, really? You do me like that? Stop me out for $1 loss and then pick us all the way up. That's crazy. Theory was right on SPY, just execution wasn't right there. Lost out on about $40, but Didn't actually lose anything on the trade. There's a Zom turnaround. Okay, Tesla make a leg then too. Tesla definitely is gonna have to pick a place and go that way. SPX. Looking at possible SPX calls based upon how futures are moving. Based upon how they're moving. Tesla's going to end up going lower, just going to save a little bit of cash. Wait for that move. All right, grabbed a Tesla 820 put. Looks like we got filled at 480. Trail stop has been set. Trail stop set too close on that Tesla put. Unfortunately. There goes Tesla. Zom, wow. INTC hanging out. There's that Tesla pullback. Like to spread the trail on that, or just let it sit. It's doing very well at the moment. Wow. Tesla put now over 620. Incredible. Probably could have spread out my trail stop on that a little bit. There's SPY finally turning downwards as well. Wow, big red candle there on SPY. as well. Everything just seems to kind of be turning around. I gotta get some music going, guys. I've got ringing in my ears. Apologies. You guys shouldn't be able to hear it though. Yeah, I mean, we called Intel and Zom calls at the open. Thank you to Kiawa for that Zom info. Those both ran clearly, and then we called Tesla and SPY puts just before 10. SPY puts now over $3, and we got in those at 186. So almost 100%. Not bad. Not bad. So Tesla and SPY puts are doing incredible right now. SOM calls, Intel calls hit incredible as well. Came right up to that fib level. Yo, if you guys followed me on any plays today, you're making a lot of money. SPX is literally an option paying machine. It says keys. It is, man. It literally is. Yeah, well done on that, keys. All right. It looks like everything has ran 100% since alert. So, you're welcome. Gap fills on SPX. Would you play calls? Yeah, probably base around 4,300. If we fill like not just like fill this gap, but like base right here, because there'd be a bullish sign. Because I don't want us to come all the way down and double bottom here. I'd want us to come like down to this point and establish an uptrend. So yeah, I'd probably get calls if we bounce, if we show any like reaction to this level. Oh my god, Tesla puts. Holy cow. Tesla puts over 945 now. We had him at 480. I can't believe mine got stopped out. I had too tight of a trail stop. Truth be told. $480 to it looks like they just hit 980. So yeah. Q's had a death cross yesterday. Yeah, I saw that as well. Damn, SPY as well. Not bad. Tesla put just hit $1,100. Oh my god. You guys are making so much money today. Yo, what's going on? What's going on, Nate? We got a couple guys in here. Texas, another one. A couple guys in here. that are also in my Discord. What's up, you guys? Shimmy's over there right now. He's live. Holy. Look at that spy candle. Oh, Powell's talking right now? Wait. Powell's talking? No way. Oh, he is. Oh, geez. Let me pause my music. We're gonna watch this. We're gonna watch this, chat. Oh my god. Alright.
Here's how I think about that. We have an expectation, those of us on the committee have an expectation that inflation will peak and begin to come down this year. And to the extent inflation comes in higher or is more persistently high than that, then we would be prepared to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings.
Now, you mentioned the balance sheet plan.
Look at this guy wearing a bow tie. What a beast!
But what I'm hearing clearly from you is that the Fed is very interested in financial stability given what's happening.
Doing, Mr. McHenry?
Decisions on a question of liquidity, on a question of market stability.
Let you wear a bow tie.
Focused on is Fed. And so this is it's actually substantial news for the House to be the first rather than the Senate to break news. So thank you for your forthcoming, being so forthright about your views on this.
You know what's crazy, guys? You want to hear something?
I yield back.
I'm half a mile from them right
The
now.
gentleman from California, Mr. Vargas, is recognized for 5 minutes.
I could probably pause this, stick my head out the window, and hear them. I could probably hear them. Thank you. Real issues now.
Cut off much of the Russian financial sector from SWIFT financial services. Our EU partners have also joined us and excluded 7 Russian banks from SWIFT. Chairman Powell, what practical effect would this have on
It's actually really...
its economy, its financial...
We'll watch the screen, see if you can streak by.
Thank you.
It's actually really impressive that EU has cut out Russia from so many banks.
Sanctions on other countries that we in this
It's really impressive that we did that. I don't know why they're asking him this question. That was a stupid
really
question.
A job for the administration,
to ask him.
particularly the Treasury Department. So we provide technical background support and things like that. But I think questions about sanctions and their effects generally would be more for the administration and the Treasury Secretary. I think you can see, I will just add, though, that the effects of the sanctions so far appear for now to have been significant.
Yeah, we saw what happened to their ruble we saw what happened to the market still closed. Is a way around it for them cryptocurrency? Could you talk a little bit about that? I know it's a little bit out of your bailiwick, but as you said, it's an interesting moment in time. You know, we haven't had to face this since really World War II, and even all the comments that you made about inflation and watching the market, so much of it is tied to obviously what the Russians are doing with respect to their unwarranted and criminal act there in Ukraine.
So I don't have any private information on the extent to which that is happening, but that is something you read about and hear about. And I just think it underscores the need really for congressional action on digital finance, including cryptocurrencies. We have this burgeoning industry which has many parts to it, and there isn't in place the kind of regulatory framework that needs to be there. It was probably no different with railroads or telephones or the internet. And ultimately, what's needed is a framework, and in particular, ways to prevent these unbacked cryptocurrencies from serving as a vehicle for terrorist finance and just general criminal behavior, tax avoidance, and the like. So I guess that's what I would say there. I don't really know the extent to which it's happening, although you do hear that and read it in the paper.
Seems like an outform since we did go down this road. Could you comment a little bit about then the central bank digital currency? It seems like that would be something that would be helpful in situations like this.
Yes, so we issued a paper after much thought and many drafts. We issued a paper, was it late last year? I guess it was late last year, seeking public comment on the costs and benefits of a potential central bank digital currency issued by the Federal Reserve here in the United States, digital dollars. And we await, I think we gave an extended comment period, and we very much look forward to reading those comments. This will be something that we invest a fair amount of time and expertise and hiring people and things like that to try to get it right, but also to understand whether the benefits actually outweigh the costs, which I think is an unanswered question both here and around the world. Nonetheless, it's our obligation to move.
I gotta go to the bathroom, guys. I'll be back in just a moment.
So that we can deploy.
I'm gonna leave it on SPY with Powell talking.
So would it, in principle, it depends on why people are using unbacked digital currencies. If they're using them to evade, visibility and evade the law, then for us just to have a law-abiding CBDC won't change that. They'll still be able to use those currencies for that matter. The existing digital currencies that again are not backed are really vehicles for speculation. They're not used in payments. They're not a store of value. They're speculation like gold. That's what they're used for. Whereas potentially a U.S. CBDC would have a wider view. I do want to stress we have not decided to do it, but we do understand our obligation is to really get to the bottom and understand both the technical and the policy issues that need to be answered.
Thank you, and I know my time's about up. I'd just say from your lips to God's ears, I hope that the inflation does peak this year and does come down because people are hurting. And thank you very much again for your steady stewardship.
Thank you very much.
Thank you.
The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman. Welcome, Chair Powell. It's good to see you in the chair. We appreciate your time and service. Chair Powell, since the last FOMC meeting in January, the global economy has become markedly more complex. Russia's unprovoked and unwarranted invasion of Ukraine has led to a very steep increase in the price of energy. As of this morning, when I checked, a barrel of crude oil was priced at $112 per barrel. And this steep increase in the price of energy risks pushing U.S. inflation potentially even higher. How does, and you've touched on it a little bit, but how does the war in Ukraine affect your thinking as you prepare for the next FOMC meeting?
So I think the first thing, again, to say is that the ultimate economic effects of the war and all of the sanctions and events yet to come are just very highly uncertain, and we need to understand that. And so, as I mentioned, I think it's appropriate for us to move ahead. Inflation is high. The committee is too high, and the committee is committed to using our tools to bring it back down to levels of price stability, which is to say 2% inflation. So, but I would also say that given the current situation, we need to move carefully, and we will. And we'll be nimble. We'll be looking at the situation as it evolves. And again, we will use our tools to add to financial stability, not to create uncertainty.
So at this point in time, you don't think that it significantly alters your expectations for the rate increases that you've discussed this year?
I don't think that's knowable yet. I mean, so we've run what we like to do is run alternative scenarios, and we've done some of that, as you would expect. And it's easy to find cases where it would affect, but we don't know that yet. We honestly don't, and we'll see.
Thank you. Chair Powell, could you explain the role of the Federal Reserve in implementing U.S. sanctions on Russia? How you're working with OFAC, how this actually is implemented?
Right. So sanctions are really designed by the administration. They're part of what the elected government does, where we provide technical support. We implement those sanctions, or we make sure that the banks obey them, that we supervise and regulate. That's one thing that we do. We also consult on, we have knowledge about financial markets and financial institutions, so we're providing technical support, but we're not the decision makers on those things. And honestly, these are decisions that are made at the level of the government, not at the level of the elected government, not at the level of the Fed.
And I know things are happening quickly and in real time here, but what actions has the Fed taken to date since the invasion of Ukraine?
Well, I'd say, first of all, since late last year, we've been on very high alert for cyber attacks. We haven't seen any notable incidents about that yet. We consult. We're making sure that the banks we regulate and supervise are also on high alert. We communicate with the reserve banks, where there's a lot of expertise in these areas and other parts of the government. So that's one thing that we've done. We're, as I mentioned, we are in very close contact with the Treasury Department, as you would expect, between every central bank and every finance ministry around the world. But again, we're not the ones who design the sanctions.
Right. Well, cybersecurity is certainly, this committee is, and especially at the Fed, is a top priority. I'm glad that you're watching it closely. Chair Powell, does our U.S. financial system have the necessary capital and liquidity to handle any economic fallout from this war? What kind of data will we be seeing?
I mean, the evidence to me strongly suggests that the answer to that is yes. We just went through a rather enormous shock with the pandemic and the near closure of the global economy, and U.S. banks' capital levels are at multi-decade highs, liquidity levels the same. It's hard for me to look at that and say that a lack of capital is a threat at this point. There are certainly issues. Cyber for private financial institutions is a huge issue, and one that they spend a great deal of time on, as do we.
In 2015, the Obama administration blocked the development of the Keystone XL pipeline, a decision reversed by the Trump administration, and President Biden canceled the permits, again, depriving the U.S. of over 800,000 barrels of oil a day. Wouldn't expanding the supply of oil by 800,000 barrels a day reduce energy inflation and lower prices at the gas pump?
We're not responsible for energy policy. That's a matter for Congress and the administration. Of course, the laws of supply and demand do work.
Laws of supply and demand do work. I've used my time, and I yield back.
Gentleman from Guam, Mr. San Nicolas, is now recognized for 5 minutes.
Thank you so much, Madam Chair. Good morning, Chair Powell. And I'd like to first recognize one of my senators all the way from Guam, Senator James Moylan. Thank you so much for making time to join us here today, Senator. Mr. Chairman, over the course of the uptick of inflation in the last year, you testified before the committee on multiple occasions that the Fed believed that the inflation that the country was experiencing was transitory. And since that time, especially today, there's a seeming change in that tenor. Could you elaborate more on that?
Sure, I'd be glad to. So I think very widely among macroeconomists and other central banks around the world, we looked at it as akin to an energy shock and a supply side shock. And the textbook on monetary policy would have you look through that, because a supply shock comes and goes, and if by the time monetary policy is having its effect, which happens with long and variable lags, we think, the supply shock is already gone. So we looked at it that way, and I think that we expected to get relief, particularly going into last fall, I would say. We expected when schools reopened, vaccinations, raised, kids back in school. We expected supply of labor to come in, that kind of thing. And it didn't happen. But it didn't happen because the supply side constraints didn't ease. They didn't ease. So it's not like, as a practical matter, what was wrong was not the theory. It was just, in reality, the supply side constraints have been much, much more durable and persistent than we had expected. So we knew that we could be wrong, and I think I always thought we could pivot pretty quickly and catch up. And we did pivot when we started to pivot in the middle of last year, and then pivoted hard at the end of the year. But in the meantime, the economy was really healing incredibly quickly over the second half of last year. Record job growth and record decline in unemployment, record tightening in the labor market. So, we know that what our job is now, which is to move away from these highly accommodative settings to more appropriate settings, given the very hot nature of the labor market and the level of inflation.
There's chatter, Mr. Chairman, public chatter, that the intensity of the inflation that we're dealing with today is a reflection of the Fed not taking policy action soon enough, not taking enough policy action. And there's chatter, public chatter, that causes the Fed's credibility to come into question as to whether or not it is acting responsibly and appropriately with the data sets that are coming in. And I bring this up, Mr. Chairman, because we have a duty to the American people to be able to raise these questions as pointed as they are, and to give individuals such as yourself an opportunity to really speak to the credibility question that's really out there in the community. If you could elaborate further on that.
Sure. It's for others to judge many of the things you mentioned, and we understand that. But so we, starting in December, at our December meeting, we began talking about significantly more rate increases. The market took us very much at our word, and as this year has gone on, the market so market participants do appear to be reacting, what I would call as appropriately to our assessment, our ongoing assessment and reassessment of what's appropriate. And I'll just assure you and everyone that we are committed to achieving price stability. We will use our tools to achieve price stability. Really, that is an essential bedrock element of everything else we want to achieve in the economy, including a strong labor market.
When we faced the financial crisis in 2008, a lot of lessons were learned about the need for the Fed to be more responsive to the liquidity traps that could take us by surprise. Given the circumstances we're dealing with today and the frustrations that the American people are facing, can you share with us any lessons the Fed has learned with respect to its responsiveness to the inflation that we've been dealing with over the past 12 to 18 months and the intense inflation that we're dealing with today?
Well, the inflation that we're experiencing is just nothing like anything we've experienced in decades. It's higher, of course, much higher than anything we've seen since I was much younger. But not only that, it's different. It's coming from the goods sector. The goods sector has been a source of disinflation for a quarter of a century because so many goods, so many manufactured goods have been
But just specifically, Mr. Chairman, reclaiming my time, what specific lessons has the Fed learned from the outcome that we're dealing with today?
Well, we're still living through it. So the main focus we have is not on doing a retrospective. It's on conducting policy appropriately to return us to price stability while also sustaining the expansion.
Gentleman's time has expired. The gentleman from Georgia, Mr. Laudermilk, is now recognized for 5 minutes.
Thank you, Madam Chair. Chairman Powell, thank you for being here, and congratulations on your nomination to continue your job for a second term. I think it's well-deserved. Before I get to my questions, though, I want to hold up something here. This is a Ukrainian dollar. It's a hryvnia. I kept some of these when I was in Ukraine several years ago doing some ministry work, and I think it's interesting to think
at this
that what
guy.
happens in the next few days may determine whether this is another defunct piece of currency and
Look
the
at this
nation returns
guy.
to a ruble, or will this maintain some of its value?
Why are you wearing a
If you look at it,
Ukrainian
you see it's a fraction,
pin?
physically a fraction the size of the U.S. dollar. It takes about 30. of
You're
these
an
Ukrainians
American.
to
You
match
wear an American
the U.S.
pin.
dollar, but when you look at values, our dollar has decreased in value, as you've mentioned, due to inflation. Now, a year ago, when you testified before this committee, I asked what your outlook was for
He's
the
got a
economy,
funny
and you
last
said you
name.
expected economic
Mike,
growth to be
you
strong
missed
for the rest
it.
of
You missed it
2021.
because one guy came
At
on.
that
He had a
time, I
bow
warned
tie.
that
This
the
guy's
$2
got
trillion
milk in his
stimulus
name and a
bill that was making
Ukrainian
its
pin
way
on. I
through
don't know what's
Congress
going on
at
in the
that time was
house.
unnecessary and
Oh, you
far
saw
too
it?
big,
Okay.
given the economy was already recovering. Lo and behold, these predictions came true. In your opening statement, you mentioned that you didn't expect inflation to continue at the rate it is right now, but I also recall throughout
There's been some decent
2021, we heard
questions,
that inflation
but there's
was
also
slight,
been
it was gonna
some
be temporary,
pretty
but I also
terrible
understand
questions as
that
well.
that prediction probably didn't include
I
the actions and the roles that Congress had, as you
I
had
feel
said.
like
Now,
some of them are
according
really
to a report
wasting
from the Federal
Powell's
Reserve Bank
time.
of San Francisco, because the American Rescue Plan was so extremely large and was passed when the economy was already recovering, this was a significant contributing factor to inflation. Do you agree with that report from San Francisco's bank that our reckless spending is a contributing factor to our inflation?
Really, I wouldn't like to comment on any particular law, but I'll say this. All of the things that we did after the pandemic were
No
we
nothing
turned our
answer.
dials as hard as we could. So did you, with the CARES Act, and the economy did benefit from that. We have the strongest economy in the world now. But part of
Hey,
that,
those are your neighbors
no
you're
doubt, part
bagging
of what
on?
we
I
did,
know.
Congress did without
That's
naming any
crazy.
particular laws is also part of the reason why inflation is something.
Right. So there are multiple contributing factors to that, being reckless spending, which devalues our dollar, is one of those. And what we heard last night was that there is not going to be a change in the direction this Congress is going or the White House. It sounds like we're just going to repeat the same mistakes we made in 2021. Now, I know that you have the tools of adjusting the interest rate. You mentioned increasing 25 base points, and you mentioned that it may be necessary to go higher. Understand that. Do you still think that inflation will be temporary? And I believe that you said it would be short-lived going forward because of resolving our supply chain issues. But since there are other contributing factors to that, are you anticipating that Congress or the administration will undo some of the failed policies, such as the spending policies and the suppressing of America's energy supply, which has been a significant contributing factor? Let me rephrase that. If Congress and the White House does not change the policies of 2021 and continues down that same path, do you still believe that inflation will stabilize? Price stabilization will come this year? Well,
First, we've had this expectation, as you all know, for more than a year, and it hasn't actually come true. So we're humble about the fact that we can't really call with any confidence the turn, but it does seem that this year we'll be withdrawing policy accommodation. Actually, a lot of the fiscal policy spending has happened now, and so the impetus to growth will be declining and, in fact, negative from fiscal policy as it stands now. And those are things, and just the natural improvement of supply chains and labor supply and things like that. Those are the things we're looking to for relief on inflation, hoping for. Very difficult to say when they'll happen, and our job is to achieve price stability one way or the other.
Okay. I see I'm running out of time. I've got several other questions, but I'll submit those for the record. Now yield back, Madam Chair.
Thank you. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes.
Thank you, Madam Chair and Ranking Member, for this hearing, and thank you to Chair Pro Tempore Powell. for joining us. It's been a challenging year. Rising prices at the gas pump and the supermarket cause real distress to working class families like my neighbors in Chicagoland, and improvements in employment and wages are real, but not nearly enough. My constituents saw a decade of stagnation after the last recession. Working class Latinos and immigrants like my neighbors are always hard hit. We simply can't afford that again. Chair Powell, you've said that inflation has been driven by bottlenecks in the supply chain. And last night, President Biden highlighted their role in corporate concentration and price increases. I'll note that CEOs from Kimberly-Clark to Tyson Foods have bragged to investors about their power to raise prices without facing competition. And last night, President Biden said, and I quote, "Lower your costs, not your wages." And my constituents were glad to hear that. So, Chairman, can you explain how raising
Very
interest
true,
rates
very
will
true.
lower prices for diapers or
Lower your
chicken?
costs, not your
Last time
wages.
it was because
That's
my
what we
neighbors
needed to hear.
lost their jobs and couldn't find diapers or chicken. So is that the idea?
Well, the idea is that right now the federal funds rate is
Tesla
close
throwing another
to zero,
short signal.
and that is a very stimulative level.
So we
It's
have
8 basis
done,
points today.
I'd say, pretty well
So,
today, considering
that
everything
is not an appropriate
has
level.
run
going
about
forward.
100%
We think
plus.
it's appropriate that we engage in a series of rate increases over the course
Zom,
of
we
this
were looking
year,
at
and
Zom
also
puts on a
our balance
pullback
sheet
on the
shrink.
VWAP.
And,
Tesla, we
so
completely
what will happen
nailed
over
those
time
puts.
is demand will
I got
moderate
stopped out on mine, just
as
too
interest
tight of a
rates get
trail
into
stop.
the economy over time, and these annual price increases in everything.
But they are eating right
prices are
now.
going up,
Those puts
will moderate
are,
as well. That is how it is.
looks
how
like
it
they
has always
peaked out
worked with
just
interest
now at
rates.
about 1160.
We don't do competition
And we had,
policy,
I'd
so
called them out
I
at
can't really
480.
comment on
So
that part of it, but I will say that that's how we think about inflation, and that's how we use our tools to get inflation under control.
about
Changing gears,
150%.
we discussed corporate concentration, and last July, the president issued an executive order on competition that encouraged the Fed and other regulators to increase scrutiny of bank mergers. It's been a long time since regulators blocked a bank merger, even an acquisition by a globally systemically important bank, or GSIB, in 2020. Chairman Powell, do you think it's appropriate to issue a moratorium on pending mergers while the Fed updates its framework for their review?
Well, I think we have a statute.
This is a
Congress has
pretty-
passed that gives us the rules.
This is a
for
pretty
evaluating
interesting question.
Potential acquisitions and mergers by banks.
He's probably got a
I think we have
lobbyist in his ear.
widely developed framework for that work, and we're continuing to implement that. I mean, any changes that would come would either come through legislation. Or,
I'm not
or
sure
through new personnel,
what bank would be
at the Fed.
merging with
Neither
what
of which
bank.
we
I mean,
have
the
right
biggest one just went through with Truist.
Learned from Wells Fargo,
that being
frontline
SunTrust
bank
and,
workers are an important resource for regulators. They see firsthand how banks implement or ignore internal controls.
That was
and
that
they
SunTrust
can identify problems
merger.
as they
That
develop.
I know that one
Incorporating
because it
frontline
changed the name of my
workers'
baseball park.
voices in our banking regulatory system would improve the information we have and diversify the voices that get heard. Chairman Powell, will the Fed commit to adding bank workers to your various advisory councils? Why or why not?
Very interesting question. We do have quite a diverse group of people on our various advisory councils, including people who are representatives of workers. I don't know that I don't know that we have ones that work councils, outside councils that advise us on bank supervision per se, but we do always seek out in all of our reserve bank boards and also the advisory councils that we do have representation from labor and also from people who live and work in and represent the interests of, pardon me, low and moderate income communities.
Thank you. Appreciate it if you would consider that. And Madam Chair, I yield back.
Thank you. The gentleman from Tennessee, Mr. Kostov, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chair Powell, for attending this morning. If you can, a lot of times we look for historical references when we try to reference an event, a current event. A number of people, a number of pundits, when they look at inflation today, they reference it back historically to the late 70s and the early 1980s. From your perspective, is that the proper historical reference to what we're experiencing today as it relates to inflation?
That's the proper historical reference for what we're what we're trying not to replicate. So we look back. Obviously, all of us have looked carefully at the history of post-World War II inflation and business cycles and all that kind of thing. One of the things that's different now is that central banks, including the Fed, are very squarely take responsibility for inflation. That was actually not the case in the 1970s. There was a school of thought that really there were certain things that an independent agency just couldn't do because it was too hard and Congress should do it. So now I think central banks around the world have an inflation target. They have transparency so that they can be held to account for it. You know, we're not waiting. We are using our tools now and that's really different than it was in the 1970s. So also inflation expectations have been anchored for a long time. They really weren't then. They were allowed to become unanchored without much of a response. That would not happen in today's world and will not happen.
A few weeks ago when the CPI number came out, I was on my way to a breakfast meeting in Jackson, Tennessee, where I represented one of my constituents and I, when we were talking about the new CPI number, he said, I don't care what the number is because
that's our time for today, folks.
More in gas than I did.
But I'm going to hang out in here with you guys just a little bit longer.
20 to 25% more in grocery prices than I did a year ago. I know what the price of a new car and a used car is. If you were me, if you were a member of Congress, what would you tell your constituents?
Yeah, I'm going to hang out with you guys a little bit longer. That is our time, technically, but we'll hang out.
Inflation is too high. We understand that, and we're working on it. It's going to take some time, but we're going to get it back under control. By the way, we're seeing this everywhere in the world. We're seeing it more in the United States because our economy is stronger, but we're seeing it everywhere in the world.
Let me, if I can, follow up on a few questions that some of my colleagues asked about. Ranking Member McHenry asked you about the next meeting and your plans for the next Fed meeting, and I think you eloquently laid it out. But you also talked about the situation that's developed in Russia and Ukraine. My inference from your answer is that if Russia had not invaded Ukraine, that the Fed would be more aggressive as it relates to the balance sheet and to rate hikes. Is that a proper inference?
No, I think that remains to be seen. As I said, we are moving ahead at this meeting. It would be my expectation in 2 weeks with a rate increase, and we're going to make progress on agreeing on a plan at this meeting to shrink the balance sheet, and I'm confident we will. The question of when we implement that plan is not answered yet, so I don't think that's clear at this point. It's certainly something that we can't answer now.
Mr. Garcia referenced the President's State of the Union remarks last night. The President, when he talked about addressing inflation, said that we need to control cost. Did you hear him say that?
I did not. I was too busy getting ready for this hearing. I did not watch.
I won't tell the President.
I probably just
when the President said he wants to control cost, or that businesses should
Facebook looks pretty bearish at the moment.
Would you have any idea what he's talking about?
I really can't comment.
Fair enough. In follow-up to my questions from
look how it's rejecting the 200 EMA.
Cyber. I know pre-pandemic, pre-invasion, one thing that you talked about that kept you up at night was a cyber attack. If Russia were to retaliate against the United States in some form of a cyber attack, what degree of confidence do you have in our nation's banks to thwart a cyber attack from Russia?
What I can tell you is that everything that we can do to protect ourselves against cyber, we're doing it we're doing it. The private, large financial institutions are doing it. They have been for some time. So it's very hard to say what's possible to happen, but we're certainly on high alert, and we will continue to be.
Thank you very much. The gentleman's time has expired. The gentlewoman from New York, Mrs. Maloney, who is also the chair of the House Committee on Oversight and Reform, is now recognized for 5 minutes.
Put it on, please. Thank you.
Facebook hitting resistance.
Thank you very much.
Oh my
Chair
God, her
Lady,
mic is
Waters,
terrible.
For your leadership in calling this hearing. Mr. Powell, first I want to say
She's on a
that at a
webcam.
time when we are still recovering economically from the COVID pandemic and we're facing challenges at home and now in Ukraine, I think and I feel deeply that the Fed should not be subjected to political stunts in the Senate with boycotts by the Republicans, and the Senate should consider the...
Oh, I'm seeing that inverse head and shoulders.
As soon as possible. The Fed has an important job to do, and President Biden has put forward qualified nominees, and we need to get this done.
On Facebook.
So that's just
right there with you, Hawk.
Point. With that said, as you and I have discussed in the past, the economic recovery has not been even, and we still have a ways to go to ensure our economy works for everyone. Just as one example, the black unemployment.
Let's see if it can hold a 200 EMA. I'm still bearish. Under 200.
And later today, the Select Subcommittee on Corona Crisis is having a hearing where we will be looking at the
SPX topping around 43.70. That 43.65 is actually a pretty big point.
That has on our families and our economies. So I want to ask you about the monetary policy report the Fed released on Friday. The Fed notes that the labor force participation rate remains well below estimates of its longer run trend as a result of retirement and people out of the labor force and engaged in caregiving activities. From both a macro perspective and a micro perspective, what does this drop in labor force participation mean for the U.S. economy, and what does it mean for those workers who leave the workforce to care for their children or family members?
Pivot candle, Facebook.
Well, having a lower labor force participation rate now, it's about a little more than a percentage point lower than it was. It reflects a lot of retirements, and what it means is that our labor force is smaller. That has consequences, including it's contributing to the labor shortage that we're seeing across.
Facebook has room up to 206.
If we had a few more million people working, then we wouldn't be feeling that quite so much. It also means the potential output of the country is lower. Many of the people who are not in the labor force are retirees who have made a choice, but some of them
Man, Selena now and all this.
who want to come back, but perhaps can't because of job care.
Alright guys, that's going to be it for me today. I'm going to head out, and I'll see you guys again next Wednesday. Later, guys.
The decline in
Thank
labor
you
force
for having me.
participation that we've seen has been much larger.